Outperforming the S&P 500 over a 10-year period is no easy feat. In fact, only 13% of investors are able to outperform the amount you would have earned, which is $34,838.88, but that's where I come in with these lists. Today and every single Friday at 8 a.m. Central Standard Time right here on the channel, I share with you 5 dividend stocks that have not only outperformed the S&P 500 in the past, but have all the numbers and metrics to support they could keep on doing so.
My hero!
Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and since today's video features some time-sensitive information, the best way to make sure you don't miss any of that is to make sure you subscribe, and if you want to show support for the channel and these videos, make sure you leave a like on the video as well. At the end of the video, I want to hear from you guys which stock got you the most excited, so let me know down in the comments below. But now let's go ahead and kick this week's list off with number 5, Alamo Group, stock ticker ALG. This is now the third time I've mentioned Alamo Group right here on the channel, and if you go all the way back to the very first time I mentioned it on October 17th of 2022, ALG has underperformed the S&P 500 since then, but I want to show you the numbers on why I still like this stock long term. ALG is a quarterly payer in the industrial sector, paying $1.04 per share per year with a forward dividend yield of 0.59%. ALG has been paying and growing their dividend over the past 10 years. They have a 3-year dividend growth rate of 22.06%, a 5-year dividend growth rate of 16.31%, and a payout ratio of just 8.63%. Now, at the time of recording, Alamo Group was actually trading 24.04% off of their 52-week high. They have an ex-dividend date of October 15th and a payout date of October 28th. And looking at this chart, you're going to be able to see the growth of a $10,000 investment into this stock versus the S&P 500 while only reinvesting your dividends. ALG would have turned that $10,000 into $46,072.41, which would have outperformed the S&P 500 by $11,233.53. Coming in at number 4 on this week's list is AbbVie, stock ticker ABBV. This is now the 7th time I've mentioned this stock right here on the channel, and a stock I personally own. If you go all the way back to the very first time I mentioned this on July 8th of 2022, AbbVie is also outperforming the S&P 500, but I love this stock long term, and I want to show you why. AbbVie is a quarterly payer in the healthcare sector, paying $6.20 per share per year with a forward dividend yield of 3.19%. AbbVie's been paying and growing their dividend over the past 12 years. They have a 3-year dividend growth rate of 6.47%, a 5-year dividend growth rate of 8.02%, and a payout ratio of 51.17%. Now, at the time of recording, AbbVie was trading 2.83% off of their 52-week high. They have an ex-dividend date of October 15th with a payout date of November 15th. And looking at this chart, that $10,000 investment into AbbVie 10 years ago would have turned into $50,872.37, which outperformed the S&P 500 by $16,033.49. Coming in at number 3 on this week's list is Watsco, stock ticker WSO. This stock has been mentioned right here on the channel 4 times, and if you go all the way back to the first time I mentioned it on July 8th of 2022, WSO is outperforming the S&P 500, and I want to show you why. WSO is a quarterly payer in the industrial sector, paying $10.80 per share per year with a forward dividend yield of 2.25%. WSO has been paying and growing this dividend over the last 11 years. They have a 3-year dividend growth rate of 11.41%, a 5-year dividend growth rate of 10.51%, and the only reason this came in at number 3 is because of that payout ratio sitting at 70%. There might be a reason why I wasn't able to find one. At the time of recording, Watsco was trading 7.63% off of their 52-week high. They have an ex-dividend date of October 16th with a payout date of October 31st. And looking at this chart shows you that this stock's a winner. A $10,000 investment into this one 10 years ago would have been turned into $74,659.15, which outperforms the S&P 500 by $39,820.27. We've now reached the halfway point in today's video, so remember, if you guys didn't leave a like already, please remember to do so. And at the end of the video, let me know your thoughts and feelings about this week's list in the comments down below. But now let's get to the rest of the list. Coming in second place on this week's list is Williams-Sonoma, stock ticker WSM. This is now the 7th time I mentioned this stock right here on the channel. And if you go back to the very first time I mentioned it on July 15th of 2022, WSM has outperformed the S&P 500. So let's go ahead and look at the numbers behind this stock. WSM is a quarterly payer in the consumer discretionary sector, paying $2.28 per share per year with a forward dividend yield of 1.51%. WSM has been paying and growing their dividend over the last 18 years. They have a 3-year dividend growth rate of 22.03%, a 5-year dividend growth rate of 17.47%, and a payout ratio of just 25.34%. Now, at the time of recording, Williams-Sonoma was actually trading 13.06% off of their 52-week high. They have an ex-dividend date of October 18th with a payout date of November 22nd. And looking at this chart, a $10,000 investment into WSM would have been turned into $58,182.63, which outperforms the S&P by $23,343.75. And if I can get a drum roll from somebody.
Drum roll!
Coming in at number 1 on this week's list is Owens Corning, stock ticker OC. This is now the 4th time I mentioned this stock right here on the channel. And if you go all the way back to the first time I talked about it on July 7th of 2023, Owens Corning is outperforming the S&P 500. And I want to show you the numbers behind this beast of a stock. OC is a quarterly payer in the industrial sector, paying $2.40 per share per year with a forward dividend yield of 1.4%. OC has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 31.52%, a 5-year dividend growth rate of 21.68%, and that's all super sustainable thanks to their payout ratio of just 14.67%. Now, at the time of recording, this great company was trading 10% off of its 52-week high. It has an ex-dividend date of October 18th with a payout date of November 4th. And looking at this chart, a $10,000 investment into this one would have been turned into $63,198.82, which outperformed the S&P 500 by $28,359.94. With that being said, if you made it here to the end of the video, but you're watching it on or after October 14th of 2024, it would really be in your best interest to make sure you're subscribed.
Can you tell us why?
This is because if you're watching it after that date, some of the ex-dividend dates I mentioned might have already passed, which means you just missed out on those next dividends.
It could cause tens of dollars of damage.
Well, of course, that's not the end of the world. I do want to note that all these stocks are quarterly payers, which means you need to wait 3 long months before your next dividend from these companies. And we all know
Ain't nobody got time for that.
Before you go, don't forget to use that comment section down below to let me know what you loved or hated from this week's list. And if you happen to miss last week's list, make sure you check that out right here. But until next time, see you.